So ladies and gentlemen, here we begin with our next session. This panel discussion where we will discover the future of borderless banking as industry leaders dwell into the realm of real-time cross-border payments. This growing phenomena can be explained in depth through our next panel discussion, of course. So I would request you all to please put your hands together for the moderator of this session. Let's welcome Mr. Gaurav Shisodia, Country Manager, Payoneer, on stage. And now I would like to invite our esteemed speakers for this panel discussion. Starting from Mr. Subhrajit Basu, Regional SVP, APAC Markets, Wallet, Fintech Discover Global Network. Mr. Sido Bastian, Regional Director for the Middle East, Turkey, India, and Africa, Swift Dubai. Mr. Mohit Taneja, Director, India and South Asia, FIS Global. I would request Mr. Gaurav to please take it ahead from here.
Thank you so much. Okay. Good afternoon, everyone. First of all, it's a pleasure to host this panel on topic called as real-time cross-border payments. No money for answering the question why. Work for a cross-border payments company. With global economies becoming increasingly connected, there is a requirement for fast, secure, efficient payment mechanisms. Cross-border payment ecosystem includes B2B, B2C, C2B, and P2B payments. In next 30 to 40 minutes, what we'll try and cover is how the landscape is evolving, what are the challenges, what are the opportunities, what are the tech innovations which are happening, and how can companies collaborate, whether they're going to be friends, foes, we can talk about that. Before we do that, maybe all of you can introduce yourself and then we can ask. Then I can start with my set of questions.
Thanks, Gaurav. Thanks for having me here to enable me to share my views on real-time cross-border payments. I am Mohit Taneja. I'm with FIS Global. It's a financial technology company, Fortune 500, listed in US. We are present in 60 plus countries, and also we are the key enablers when it comes to, we currently have 90% market share when it comes to the world leading bank who are with us. That's about us and as an FIS. Talking about it's been a historical decade for me to see the revolutionary change which has happened in over 10 years. Okay, I think we can. I'll just quickly stop here and just give it to Sido to introduce.
Thank you, Mohit. So Sido Bestani, Swift Dubai, managing the big region which is called Middle East, Africa, South Central Asia, which include Russia, CIS, and India subcontinent. You might all know what Swift is. Swift is a cooperative. So it's not like it is a private company, so cooperative owned by the banks around the world, so in 200 countries and owned by more than 10,000 financial institutions. And I'm looking forward for this discussion where there is a lot of disruption in this payment landscape.
Good to hear that you work for the fastest growing region in your company, right? It includes India.
Thanks, Sido. Subhrajit here, work for Discover Global Network, better known as this part of the world as Diners Club International. Some of you may have a card of ours. Been with Discover for 12 years now. My remit includes heading commercial for APAC and Indian subcontinent as a geography. This topic, I'd say there are lots of experts in this room as well as in the panel. And I look forward to have a great conversation and learn a few things as well. Thank you.
Thank you, everyone. Okay, I'll start with being socialist. So the question is for all of you. Any one of you can start. What are the key challenges and opportunities in current landscape for cross-border payments in India? And how has it evolved over years?
So, so before answering that question, it's always good to set the context of the opportunity. So, does anyone have an idea what the global payment opportunity is? Throw a number. How much? Few. Okay. It's in trillion for sure. Okay. So it's $195 trillion as of last year. McKinsey did a study. So if you break down global payment opportunity to various silos, the largest chunk of it comes from domestic B2B, which one business paying domestically, other business. That's roughly $80 trillion. Then the fun part starts. The cross-border B2B, which is the next biggest silo, is at $35 trillion. The next two silos is C2B and B2C, which is customer paying to business, business paying to customers, roughly $30 trillion. And the last but not least is P2P or C2C as we know it, is at $10 trillion. Now if I keep, let's say, domestic B2B out of context, you're looking at an overall opportunity, what we're discussing here, of close to between $40 to $50 trillion because every opportunity barring cross-border B2B, which is all cross-border, has a domestic leg to it and a cross-border leg to it, right? So we're looking at a $45 trillion opportunity between all stakeholders, and frankly, none of them need to compete beyond a certain threshold because the opportunity pie is so big. Having said that, coming to Gaurav's point, the challenge is, it's not easy. Otherwise, everybody would have done it by now. And they would have taken a big chunk of the pie. The challenges vary by geography, vary by the place and things like that. But broadly, can be constructed into two aspects. Access, speed, right? When you're moving money, you need access, the instrument, the frontal interface to make it popular. Also, you have to have the other part of it, how fast do you move money? If your unofficial channels move money faster than official channels, then you have a disruption in the system or a deviation in the system. So I think those would be my fundamental constructs of challenges, and probably over to Sido to talk about more of it.
Thank you. Yeah, I look at it maybe from a different angle, coming back to Gaurav, you say what is happening in the cross-border for India. Obviously, the cross-border business has increased drastically. I mean, you shared some numbers. Very much in the trade, exponentially increased here in India. If you look at, for example, also remittance, India is the first remitter country, and so on. So a lot of increased business there. If you look at the India payment system, it's a robust payment system. I mean, you all know about UPI and the like. And basically, it's, when we're talking about India cross-border payment, is how India is able to talk to the outside world. And the outside world is actually quite fragmented, coming back to the fact that, it's a wealth of opportunities there. So we have the traditional business, which is the correspondent banking. It's been there for the last 50, 60 years. It hasn't been always efficient in the past. The last few years, things have improved. For those who are making cross-border payment through correspondent banking, you know that in the past it used to take maybe 4, 5, 6, 7 days, before your money gets to the beneficiary. Now it takes less than 1 day for your payment to get there. And SWIFT was also, implementing some of the functionalities which allowed to have this increased efficiency around GPI tracker and so on. So that's one area, the traditional business. The other one is, and we have many of them here in this conference, is the fintech. Fintech, disrupting the landscape. I think the fintech has brought up innovation. Sometimes, a lot of good customer experience, and obviously healthy competition, which is there, to reduce the prices for the end customer. So the Indian market, when it needs to look at the outside world and connect to the outside world, it needs to use, different channels to connect to, those different fintech or continue with the correspondent banking. And there, there could be, you were talking about, so the opportunities is you can connect to all those different channels, which will give you a high level of endpoints, reach out to a high level of endpoints. The challenge is, how to connect to those different channels in a standardized way, which allows you also to have scalability, because each time you connect, you need to invest. And it's, at the end of the day, you're looking also at your cost. Is the cost, worth it to invest in those channels? So this is a bit from my angle, let's say.
I'm just adding to that bit. I think another aspect to that is that the way trade is happening in the world. It always used to happen from west to east. Now what you're seeing is emerging markets actually exporting a lot. If you talk about Indian government itself, we have very aggressive plan to reach to a 5 trillion economy at some point of time, and exports going to be one of the major initiator to do that. So I think that's where also what you see is regulator and government both supporting digital payments and innovation, which obviously now the focus for the companies from West will become towards the emerging markets, because that's where the growth is coming.
So I think to add to what you said, what I'm experiencing is we are moving to an era of global village, wherein people are moving out of a country to look for better opportunities, better lifestyle. I think that's what bringing us an opportunity to get more cross-border payments. I think if we also see India were the largest recipient of remittances in 2022. It was at 89 billion, and followed that. I mean, that's more on the numbers, and moving on to your answer your question, Gaurav, on the challenges and opportunity. So there is a Chinese proverb, which says, when the wind of change blow, some build wall, some build windmills. I think that's when the Indian ecosystem is creating the whole UPI infrastructure, robust, resilient to support the overall ecosystem. I think the primary concern which I foresee is the cost around cross-border payments. If we see the numbers are at 6%, that's the average cost to get cross-border remittances in the country. I think the UPI is in the forefront that which is bringing new use cases to overcome those challenges in the cross-border ecosystem. There is illicit finance risk around money laundering. That is another area of challenge which I see, and I think the overall ecosystem is working towards solving that with bringing a lot of technological innovation, which I will just talk about it. And if there is foreign exchange is another area, with a liquidity requirement. I think the standard, if people understand the standard mode of remittances currently is through the correspondent bank in India. I think that requires a lot of pool of fund for cross-border to make it happen. I think that's another pain point which with the new era of UPI and CBDC is trying to solve. And there are more I can talk about. There are a few more. I mean, Gaurav, if that's
sure. Cool. I'll pick up on the point you spoke about. I think one analogy is the world has become a market, right? So 5, maybe 10 years ago, I never thought of ordering something from Amazon, US, getting it in my house in India, Bangalore. Didn't happen. It required a cross-border payment. So there is technology which has changed at a platform level, which has forced maybe fintechs and banks to really change the way they operate, and hence lot of disruption in cross-border payments, right? So overall, the market size has increased. So going back to the technological innovation, maybe Mohit, you can take this one. If you can talk about some insights how technological innovation has driven cross-border payments in India, how are they enhancing the customer experience and safety, and probably after that, any one of you want to pitch in.
So I think there are other challenges when it comes to the ecosystem it is facing in terms of the technological enhancement. If you see in the Web 3 World Web 3.0, it talks about decentralized finance, which is to work towards removing the middle stakeholders. That is to improvise the speed, efficiency, and bring down the cost of remittances. That's one innovation which on the decentralized finance, which I am seeing happening under the Web3 version. There is, see, on decentralized finance is created on a blockchain technology. I think earlier, as we know, blockchain was first to was built to support Bitcoin. I think now there are newer use cases being explored around that area. And I think CBDC is one of another use case which is taking momentum in the ecosystem. Talking about it as we sit today, the RBI has already issued the retail and wholesale CBDC, to cater such requirement inside of the technological innovation. There are a couple of banks who are live. It's not just live; they are interoperable to manage central bank digital currency. The names are out there in the public domains, but that's one about it. And the third, which I see, is metaverse. Metaverse, it's more of virtual reality. I think the ecosystem is adapting it so fast. There is one bank who was recently, communicated to the industry that we are bringing up a virtual reality experience for customer onboarding platform, which will simplify, which will enhance and improvise the overall journey. I think that's the objective. The cost will come down. So these are few technological enhancements which is making a change in the ecosystem. That's
Maybe just, if I can add a couple of words there. Like Mohit said, because there is a wealth of opportunities out there, so, the fintechs are coming with new technologies and so on, so that Mohit just mentioned. But at the end of the day, it is about, if you want to make business there, you need to make sure that it is scalable. So you need to have a standard and so on, and then to make sure it is financially sustainable. Because at the end of the day, one does, all of these things, but, at the end of the day, the investor is looking also at the numbers. So these are maybe the two drivers.
So we Diners Club have a fairly large commercial business, right? Traditionally, we've had that. If we look at payment challenges, if you briefly break it down, between P2P, I think there's a lot more innovation happening on a P2P or C2C space. I think today, cross-border B2B is still, I would say, a significantly, compared to C2C, is a much lesser activity happening. One, because it's a much more large ticket size payment, so there is a lot more rules, governance around it. So we definitely see more action on the P2P side than B2B. And I think the real opportunity of pie from India perspective, as India globalizes, as more Make in India happens, is to see how Indian companies or companies in India can actually send funds abroad. Every country wants funds incoming. So there's a lot of incentives built around how you can attract more funds in, right? It's far more complicated from a country like India when you have to send money out. And I think the real cross-border Rubicon is when we'll have more innovations coming in when you're sending the money out. Because as we aspire to become the third largest economy, that will not only be money coming in, it will also be money going out. And I think that's where a lot of, at least in our ecosystem, the network ecosystem, we're thinking about how do we solve those challenges for sure.
So for me, the takeaway from your point is that B2B typically is a larger transaction. Plus, it's way more regulated. The exporter needs to settle his bills to ensure he gets whatever duty exemption he needs to get. So maybe some bit on regulation bit can really help to grow this pie. Next question is to you, Sido. Since we're talking about technology, Swift API, how does it integrate with Indian payment stack, and what benefits does it offer to financial institutions?
So, I mean, SWIFT has been there, like I mentioned it, for the last 50 years, and we've been providing secure, standardized financial messaging to the market. Obviously, with all the changes over the last few years, new technologies coming up, we've been looking at blockchain, done a good number of proof of concept and so on. Obviously, we came to the to the challenge of scalability and so on. But one technology that we've been really looking at is really API. And for the last few years, we've been focusing very much on making sure that all our products and solutions are API enabled. But not only that, we're looking at working also partnering with local communities to develop specific APIs. And if I may take maybe just 2 minutes there to give you an example about what we're trying to do maybe on the domestic market here in India, but also on the cross-border side also for India, coming back to the theme of the discussion. So I don't need to tell you that trade has been increasing drastically in India, and there is a good portion of it which is paper-based. So how do you move from paper-based to something which is more electronic, which is more efficient? And we are working currently with the Indian financial community to replace those paper-based with APIs between the domestic players here. So whether it is bank guarantees, whether it is e-stamping, so a good number of initiatives there in order to replace all these paper-based through API. The other one, coming back to Subhrajit, what you were mentioning, it's about the cross-border side, and there are some hurdles there. So how can we make sure that for example, all the incoming payment to India, cross-border incoming payment to India, are processed seamlessly, are not rejected, and so on. And one of the area we're looking at is how can we, for example, pre-validate the account number with the beneficiary name before it gets to the Indian market. And so we would do that through API. So this is sent by the sender bank to the local community, to the local banks, to confirm the account number. So whenever it is processed here in India, you are increasing your chances that the payment is not going to be failed. So these are some examples of what we're doing through API. And obviously, one of the reasons we're doing here in India is because India is very much API savvy. There has a lot of expertise and a lot of development has been done here. So that's the reason why we are also doing all of that here in India.
Sure. Thanks, Sido. I'll take on to a completely different topic. So, Subhrajit, if you can talk about what role cards play in cross-border payments? Because we've spoken about API, we've spoken about UPI, we're talking about a lot of fintechs. So maybe a view on how do you see cards playing a role in cross-border payments, and how are they positioned in international payment landscape?
Yeah, so just to put in perspective, networks are not only about cards. So but fundamentally, you're moving money from payer to pay, right? That's the root. That space has been traditionally dominated by closed loop networks, or closed loop players like Western Union, MoneyGrams of the world, and also correspondent banking, which Sido referred to, where they primarily use SWIFT. Over the last 5 years, there's a new challenger in the ecosystem. These are the multilateral platforms. When I say multilateral platforms, primarily the networks, or Visa, MasterCard, us, NPCI with UPI, they're all coming into this space, offering this movement of money from your payer to pay. Now, what do networks do well? Networks do authorization well. They do net settlement. They have more connections to financial institutions than any company in the world. I mean, if you go back and check, who do all banks or financial institutions talk to? They'll talk to one of the 2 or 3 large networks in the world. So the public infra is already there. So what did they do? They built on that infra to ensure money moves faster, better, maybe at a lesser price, right? So fundamentally, that's where the networks have come in. Initial experiments with cards failed. So without naming the company, one of the largest network in the world tried experimenting, saying, why can't we move from one card to another. They tried it for a few years, didn't really work. So they kind of retuned the strategy saying, why not move it from card/account to another account? And that's where they started getting traction. If you look some of their quarterly reportings and what they talk to the investors, Visa Direct is right on top of their mind share in terms of their strategy. NPCI, UPI, they fundamentally altered how money moves domestically. And although good work NPCI Limited International is doing, they're building the same ecosystem replicable without, as a network. Obviously, that will take time to build that kind of, but once that ecosystem is built, these networks will be a significant player in the eco platform. Not necessarily using cards as a form factor, but using exactly the same rules and infra, which cards have built over the last 50, 60 years. Now, what value are they bringing on top of this infra? They bring in tokenization. They're bringing their fraud detection system, which networks have been doing that for the banks for many years. So, this value-add services layer which sits on top of that makes multilateral platforms a very distinct challenger or a addition to this fundamental ecosystem, which is dominated by some of the MTOs and the correspondent banking ecosystem. And I think that's the most exciting space now for networks to be in. Visa Direct has been very successful. MasterCard Send. Discover has Delivers, called we just experimenting with Discover Delivers. UPI with NPCI. So this space is up for a very interesting shakeout over the next few years as some of these programs become more and more dominant in this space.
I'm just going to add to what you spoke about, and it's a follow-up question. We spoke about how networks have been able to really change the way they operated from cards to really moving money from account A to account B. And you also spoke about B2B opportunity being really big, right? So how is industry focusing on digitizing some of these cross-border payments?
I think fundamentally industry, this is where I think sense of collaboration is coming in, and you see a lot of announcements coming in. There have been acquisition, there have been partnerships. End of the day, the platform which will win will have two best customer interfaces, payer side and the payee side, right? How easy it is to send money, whether it's B2B or a C2C transaction, and how easy it is to receive the money, which form factor you receive the money, and then how do you use that money? Because somebody who's the net recipient will have to finally find end use of that money. If it comes in a plastic, for example, and that person is not aware of how to use a plastic, then that money is not relevant. That person sitting, let's say, in a village, let's say in Philippines, is not relevant to that person, right? So if it comes in a wallet, in a mobile, which that person is very comfortable with, then the usage of money is faster. What if you could pay directly the bills sitting, like I think NPCI International, BBPS launched very recently, right? You could pay from US or other markets bills in India. Like your son, if he's studying or is working in US and parents are here, you can actually pay bills, right? So I think it's all about collaboration with the fintech ecosystem and other partners is what is fundamentally changing this game. Not to mention a lot more acquisition happening in the parts of the value chain to move that as a very focused business line, slightly different from how card networks operate. I think over a period of time, you'll see this business line will operate slightly differently than how the card networks operate their business line, because the drivers are slightly different.
Thanks.
Maybe if I may, Gaurav, if you allow me.
Yeah, please.
Okay. So what has been said is that, at the end of actually what you mentioned at some stage, that the B2B business was, more regulated and so on. What we see coming back to what has been said is more collaboration between the fintech and, for example, the traditional banking and so on. So the rules are, the level playing field is getting, to normal for everybody. Everybody's basically having the same challenges and the same rules. And the reason why I'm saying that is we tend to think that, doing cross-border business is only technological, is only about interoperability, is only about standard. It is very important because you need that, you need to talk a common language. But at the same time, you have also sometimes some challenges local challenges such as, we heard about fraud detection, you can have, compliance checks, you can have capital controls, all of those things which can also slow down the whole cross-border process. So I just wanted to mention that, there are some challenges which are out there, which is, that needs to be tackled. It's not only about technology.
I agree, sorry.
I would like to add to what Sido said. So, I think he's bringing a very important and relevant point when it comes to standard messaging system in the ecosystem. If you refer to the current ISO standards, okay, when it was recommended as it was 1947, and then the adoption happened over a years, and in 2004 ISO 20022 was introduced. So if you see, we are still at the older version of ISO standard. There's a transition happening from the older version to a newer version. And since 2004 and we are in 2023, this push came in last 4 years. Maybe the G20 initiative push on the cross-border real-time payments was a reason behind it. Political reasons there are behind it. But I think having a messaging system, a common messaging system, is a key role to adapt to newer technologies. I think that has been the concern. I think that the legacy system has always been the concern for adoption. When I think Sido also talked about how he's doing on API. They are enabling APIs infrastructure, pushing newer use cases. Collaboration is coming in. I think with newer ISO versions, it will be simplified for having an API infrastructure in place.
So Gaurav, let me take over your role for one question.
Don't ask me the question.
No, we all have to be fair to each other. So. No, but we've so much heard about Payoneer being such a successful company in this space, in the cross-border, which is a fairly complicated space. So what, according to you, Payoneer did differently than some of the other players in this space to become really successful in this space?
I think that's something what you spoke about. We built a network for last 15, 16 years. Our strength has been the network we have built globally. So we work with more than 50 large banks across the globe. You name a large bank, we work with those banks. Most of the countries we've built a redundancy of 3 to 4. So if one channel fails, I have a second, third, fourth big bank to really get the transaction done. What it does is it helps me build trust with the customer. Something which you spoke about, ensuring that there is a payer and payee experience is great. That's what has been our focus, to ensure that we are able to do that. I think that's been the biggest differentiator. Beyond the point, price, technology, a lot of these things can be replicated or built or copied over a period of time. But the network we have built is something which has been, I think the key differentiator.
Thank you.
Wow, I didn't expect this, but yeah. Cool. Maybe last question for the session. And again, as I started, I'll be socialist again. Everyone can answer this question. How do you see cross-border payment system evolving in next 5 to 10 years? And what trends should business and consumer be aware of?
Okay, so
You know this came just because you asked me a question.
It's called revenge.
part of the game. So I think there are two subsequent trends moving in different directions. One, speed of payments is on a downward slide and will continue. Today, maybe it's T+1, maybe 5 years back it was T+3. At some point in the near future, it'll be T plus few seconds or real time, right? It's already real time in few markets, but cross-border real time is still right at the top of the holy grail right now. I think that will be the base standard for P2P payments. Let's be very honest as people build up. On B2B, I think it would be more about moving monies with complete digitization of documents. I think that's the real holy grail for it. Because today there's so many clunky processes in moving large monies. Let's say you're going to move in China. You know how many signatures you require to get to move actually money into China for a B2B space, and that, so those, I think digitization is, I think over the next few years we'll see. So these two trends will move in parallel, and I'd say 3 to 5 years you should be there.
Do you want us to comment or?
Up to you. If you have something, if not.
No, I mean, just complementing, because I'm completely aligned with what Subhrajit has mentioned. One thing is what we've seen in the past. We've seen a good number of this fintech going their own way and building network and all of that. But I think at some stage they also realized that it would make sense to collaborate also with some of the traditional players, because the traditional players is bringing the reach, the network that you were talking about. So we see really the more and more collaboration between, maybe the fintech bringing this innovation and, new ideas, and, complementing that with the reach of the banks or the financial institution. So that's on one side. And obviously, at the end of the day, what is very important is really the reach. It's how can you make sure that you are able to reach out to a maximum number of points without having to redevelop, all those channels that you need to do, because it has a cost and it needs to be financially viable at some stage.
Thanks, Sido.
So I'd just like to answer it a little differently. Thanks to the consumer, demanding consumer. It's not the challenge for real-time cross-border payments. It's the challenge for the round-the-clock availability, and I think that's what we are trying to achieve out of the overall understanding out of the discussion which we are having today. And that's one piece of it. And I think collaboration also, there is another piece of collaboration which we should talk about it. I think we, due to limitation of time, we did not talk about it. I think collaboration is another key area of engagement. That's what, NPCI formed another division of NPCI International. I think that's something they are doing doing a collaboration. And for one such example is in India and Singapore, which PayNow and UPI has recently done. So I think the next 10 year is going to be the collaboration and partnership. And what I would say, a card network like Discover has achieved in another last 40 years, I think we are trying to achieve in another 10 years. So I think there is going to be a very fast track move from four-decade work to bring it back to maybe another 5 or 10 years. So that's the kind of vision I think the country is having currently.
Thanks, Mohit. So just gonna sum it up. So payments will get cheaper, they'll get faster, less fraud, and customers are happy. That's what it is. Cool. That wraps up the session. Thank you so much for all the panelists for giving all the answers diligently. And thanks to the audience. Thank you so much.
Thank you.
So much, Gaurav.
Do we have a question? Okay, we can allow one question actually. Just one.
Any questions? Yes.
My question is to Mr. Basu. You pointed a very valid point that India as a country, perhaps outward cross-border payment hasn't had the requisite attention that it has to. All our focus is all on inwards, right? So I wanted to hear your thoughts, what role fintechs, intermediaries can potentially play, because the regulations, the way RBI has drafted, have been written keeping in mind a bank doing a transaction and not really a fintech, maybe like a Payoneer or somebody like that. Right? So what's your thought? How do you see those evolving over the years? Thank you.
I think regulation creates the rails for future, and it is in sync with what the economy wants, right? The requirements of $1 trillion economy would have been different from a $3 trillion than a $5 trillion. So I think as we grow in size, I think outward mobility of capital would have to be loosened, keeping in view what the strategic requirements of the country is. So as a long-term direction, for sure there will have to be some tweaks to our capital controls as and when the requirement happens. And obviously then that would create opportunity for fintechs to create better, I would say, customized offering or better interfaces to move the money. Fundamentally, money will move from one banking channel to another banking channel. I don't see in the near term it moving to a non-banking to non-banking, right? It's not, might not happen. So I think it's all about the requirement of the economy, which will then obviously be taken care by the regulation.
Yeah, this question could be answered by either one of you.
Can you make it a little quick? Because you're already
Yeah,
short of
sure.
time. Thank you so
So
much.
the key reason of the lag and the gestation in the FIR and FOR is the last leg, which is the last mile of settlement for FIR, where the FEMA is not checked in the real time. And for FOR also the LRS has a lag where there is no real time reporting, and then the cluttered experience in the FOR and FIR both. Do you see any upcoming innovations from regulator in this regard?
So, Sunil, I think your question is if we are trying to simplify the real time, we are at near real time today.
Right.
It's not real time. That's your question. Are we going to move towards real time? Is the
so
question.
a lot of things are spoken about innovation here, just to keep, optimize the process, the transaction flow. But the real challenge is that when it comes on a checking of FEMA at FIR and the reporting the LRS for FOR. So these are the things I think which are primarily challenge to, having this optimized transaction flow.
I can answer quickly. So it's coming back to what I was saying before. It's not only about the channel, the plumbing, so the interoperability and the standard and so on. There are also sometimes some local regulation which makes it a bit difficult. We heard about capital market fraud, compliance checks, and all of that. And this can only be triggered by the regulator. So the regulator can only change that in order to make the whole process seamless. At the same time, the regulator would want to make sure that the same rule applies to all the different players. I hope I answered.
Yeah, I was just asking that, do you see any upcoming innovations and something in this from regulator side, any indication to remove all these frictions?
It's different from one country to another. I was in South Africa last week, and I can tell you capital control is also a burden for the banks.
All right, so with that, I'd like to thank our moderators and esteemed speakers